Welcome back. You're watching First Trade, and let's look at what's happening in the FNO segment with FNO 360 powered by 5 Paisa. To begin with, the Nifty is holding on strong at this point in time, up nearly over 1% at 24,269. But there's an interesting thing which is happening in the FNO side, that the futures trading at a premium of nearly 90 points. There's an open interest jump of 40.4%, which is there on the Nifty 50, especially the Nifty Bank. Again, it's up nearly over 1% as we speak. The premium at 323 and open and some shorts getting added at this point in time. 2.56% jump in open interest for the May futures there. Look at the constituents of Nifty. And you'll get a good sense of what's happening in various stocks. There's a long buying, short covering happening in HDFC Bank. ICICI Bank is also seeing some buying happening coming in there. Axis and SBI are also seeing that. There's a short buying happening in Kotak after the earnings which have come in. The stock down 3% there. In some of the other stocks like a PNB and a Bandhan are seeing short covering and long buying there. So pretty much private sector banks is seeing some kind of buying coming in, and there's some index is going short at this point in time. But interesting thing is happening in the calls and put writers there. You have 24,200 where there's a lot of put writing which is coming in, but 24,300 is where the action is currently, with a lot of call writers putting up a strong resistance coming at that position there. So 24,300 May 12th, which is next week, because we have the expiry for the current series tomorrow. A lot of rollovers are happening from the current week to the next week there, which is there. And if you look at the distribution chart, it gives you a good sense of what's happening. 24,200 continues to be a good resistance there. Basically, the call writing is so high in 24,200, and the index is currently about 24,200 there. So watch out for that level. If we don't have a good support coming in from the put writers in the next 1 hour or so, we may see the index slip below the 24,200 level going forward. So that's one thing to watch out for. Nifty, among the futures gainers, you have good stocks like Vedanta, which is up on the back of long additions, HUL on the back of short covering, and Maruti on the back of long. Vedanta up nearly 7.78% and HUL 4.6% and Maruti 4%. So some strong gains coming in for some of these stocks. Futures losers include stocks like Mazagon Dock, where we are seeing some shorts getting added. Avenue is seeing some shorts getting added. Stock down nearly 4%, and Kotak Bank is down nearly 3% after the earnings there. Open interest gainers, you have stocks which are gaining, which is Vedanta, where there's a nearly 17% jump in open interest. So on a BLW, seeing some shorts getting added, 9% jump in open interest, and Mazagon Dock is also seeing some 6% jump in open interest with some shorts getting added there. Among the losers, you have stocks like you have HUL with the short covering, which is there, Solar Industries and AB Capital there. But interesting stock options. Maruti is the most active, 14,000 call is the most active one, with where the premium has jumped almost 183 rupees. There's a 22,000 addition in contracts with respect to the open interest there, and the stock hovering about the 13,950 mark there. So 14,000 seems to be some resistance coming for Maruti at that point in time. Kotak is other stock where we have seen some activity within the private bank space, where 360 May put is very active with the premium up nearly 0.15, 15 paisa. There's an unwinding which is happening at this point in time. 6.92 lakh contracts have been unwound, and the stock hovering around 374, down nearly 12 in today's trade. So that's an update from FNO 360.
All right, let me in fact bring on board Vivek Vikram Singh, Managing Director and Group CEO at Sona Comstar, joining us this morning. Decent set of numbers, frankly, stock under a bit of pressure. But Mr. Singh, give us a perspective. Margins have come in at about 24.5% this quarter, probably one of those pieces that's weighing in with regard to how markets are perceiving your numbers. They're down to 70 basis points on a YOY basis. What levers will drive margin recovery from here, and by when do we see that margin normalization play out?
Let's start with the fact that the margins in the Q4 last year were on the basis of the automotive business alone. As you know, we've acquired Escort Kubota's railway businesses here, which is inherently at a lower margin. So when you mix them, the margin was expected to come to this category. So we had always maintained that our margins will be in the range of 23 to 25%, and that's where it has come. So there isn't that much question of margin recovery. We are in the margin range that we had guided towards, because this is a post-acquisition margin. The period you're comparing to is actually pre-acquisition.
Vivek, hi, morning. Your order book stands at nearly 23,700 crores, which is 5 to 6 times your annual revenue, with nearly 70% of the EV, 70% coming from the EV side. How confident are you on the execution for FY27, and how much of it can be realized by you in this year?
The order book, or the net order book, this is basically an accumulation of the next 10 years of orders that we have to execute. We do not give guidance on every year basis, because that is tantamount to actually predicting or saying what is the next year revenue. But what I can say is a bulk of this is in the first 4 years. So if you divide it 40-60 in time frame, 60 to 70% is actually in the first 3 to 4 years. That's how it is structured.
And BEV now contributes about 39% of revenue. Where are you seeing the most traction within global EV markets, especially Europe and US?
Yeah, I mean, EV has been a phenomenal growth story for us. And I think, although war is obviously very tragic and the human cost is something that all of us have to look upon as a tragic thing, what it has done is it has brought to the front energy security, and electrification has got a renewed momentum, which is very positive for our business. We are seeing extraordinary growth in Europe in EVs and hybrid. We are seeing renewed growth in US in EV and hybrid, and we are seeing phenomenal growth in India in EVs as well. What we think is that India will also take some more policy steps to aid electrification and the movement of India's economy away from petrol-based economy to electric-based economy. And I think traction motors, suspension motors, followed by differential assemblies, these three segments will do very, very, very well in the next couple of years.
Vivek, if you look at crude prices, they've been inching up, and as well as the global uncertainty is going up as well there. Do you see a shift in demand in some of the geographies because of this global uncertainty coming in, especially with respect to acceleration of EV adoption?
100%. So the EV adoption has suddenly got wings. I would say last 3 odd months have been very positive for EV adoption. Of course, it has a flip side that because of the oil prices going up, it has meant that there is sticky and persistent inflation and commodity prices have gone up. And it is unfortunate, but I think if we want to solve this in a long-term way as a country, as a world, Europe and India both need to electrify pretty much everything. Unless we move away from oil and gas dependence, which is import-based, we cannot possibly build towards a sustainable future or have a sustained economic growth. So I think it's an imperative that companies as well as governments all over the world have to realize.
And on Novelic and ADAS, when do you expect meaningful revenue contribution from these new tech bets?
Hopefully in the next year, we should start seeing it, next calendar year, I mean. We should start winning projects. We have already won a good in-cabin sensor program, but deliveries start later. As you know, in our business, after you get order to start a production is about an 18-month cycle. So from next year onwards, we'll start to see good revenue there.
Vivek, it was a pleasure talking to you today. Thank you very much for joining us on ET Now. Moving to the next set of our guests, Mr. M.K. Surana, former CMD of HPCL, joins us. Mr. Surana, hi, morning. The latest news being the hike in export duty on diesel and ATF. How do you see the latest development?
Actually, export duty has been reduced from the last time rise, so it is not an increase. So the question is that there had been export duty which was initially something, then increased, then again reduced. So it is depending on that what are the cracks in the market for various products, and depending on that, the government is varying that to ensure that there is lesser incentive for export compared to domestic sale.
Mr. Khurana, how do you see, as a country, we navigating this entire crisis? We have been so far able to absorb all the shocks. Do you see at this point in time, now that election results are also out, or the government allowing OMCs to pass on some of the cost to the consumers?
There would be increasing pressure on the government to do that because there is only a limit to up to which government can absorb or the OMCs can absorb. And the longer this conflict is going on, the more and more stress it is creating on the OMCs and the government. So it will depend on the perception of the government on how long it goes and what is the trajectory of crude prices. The crude prices have been traveling in the range of, let's say, 90 to 120, depending on the news flows and the way the negotiations, which directions are going. And but the top it has touched is 120 and minimum it came to 95. So volatility will be high till the time some meaningful resolution is achieved, and depending on how is the messaging. But I think the longer it goes, there will be more and more pressure from government and the OMCs to at least pass on some of the hike. Let's see how the trajectory takes.
Obviously, there'll be pressure, Mr. Surana. Hi, this is Harsh joining the conversation. Obviously, there will be pressure, but give us a sense. How long can the OMCs hold out for? Because you have a good, decent visibility of what that could mean. And therefore, what's your take with regard to timeline?
It is difficult to guess that, because the fact remains that there is under recovery right now. In fact, the OMCs might not be able to recover even the basic raw material cost right now. Now it is a function of the cracks, the crude prices, and the exchange rate, and all the three had been on high. Of course, there is some moderation on the cracks. While the crude prices had been high, the cracks have moderated a little bit for diesel and petrol in the recent time. But it can change again. Second thing is the exchange rate also has got an important impact, because 1 rupee rise in the exchange rate will have almost the same effect as the $1 rise in the crude prices. So there is no denial that actually just given a free market, it should have been changed right now or even earlier itself. The very fact it has been retained the way it is because of the larger impact which it has got on the macroeconomics, on the inflation, and the government thinking on the total policy, macroeconomic policy issues. And therefore, it will depend a lot on the government thinking on that and how they make up to the OMCs for the losses which they will incur, because the liquidity of the OMCs will also be an issue if it goes on for a long time. If you are not able to recover the money which you are spending on a raw material and on your processing. So it will be difficult for me to say that how long, because it is not that you are holding a kitty and then you are trying to say that how long it will last. It is depending on basically the policy thinking. And there the perception that how long it goes matters a lot. Because all three things are related right now: the crude price, the cracks, and the exchange rate. All three are related. Otherwise, a higher exchange rate should have reduced the crude price, or a higher crude price should have impact on the exchange rate. But right now, all three are on high.
Mrs. Surana, so far the OMCs have been only able to increase the prices of commercial LPG thrice, I think, if I'm not wrong. Do you think that's sufficient for them to recover some of the under recoveries, or there will be a need to increase the domestic LPG prices as well?
No, the commercial LPG is around 10% of the total LPG. So I don't think that they will be able to recover the under recoveries because of the hike on the commercial LPG. This is only to the extent that the commercial LPG, why it should be subsidized. And that's why it is logical that the commercial LPG should be at the market determined price. And the domestic LPG, because it affects every household and there is a lot of below poverty line consumers because of the Pradhan Mantri Ujjwala Yojana scheme. That is why the domestic prices had been retained the way it is and the commercial LPG has been increased. So I don't think that that will make up. Rather, it is only reducing the loss which otherwise you will incur even on the commercial LPG.
I think the government will be able to compensate these OMCs with respect to the under recoveries, whether it's in LPG or on retail fuel?
No, as far as LPG is concerned, it is still a control commodity. So there is a case for government to compensate for the LPG under recovery, because that's the way it has been in the past also. On the retail fuels like petrol and diesel, logically they are the free commodities, and there should be some different way of looking at the thing, how government actually compensate the OMCs on that.
And Mr. Surana, if I can switch focus to global, right? OPEC, OPEC plus, UAE now not part of that consortium of sorts. Give us a sense of what this means in your opinion.
No, UAE exiting from the OPEC is significant because they were almost the second highest producer in the OPEC pack. And they have got a desire to increase the total production. They claim to have capacity of 4.8 and to increase it to 5 million barrels a day. But because of the production cuts which the OPEC has taken, they were able to supply around 3.2 to 3.5 million barrels. So definitely it will bring additional barrels in the market, and which will be good for the oil consuming countries. But the second more important thing will be to some extent it will also dent the capacity of OPEC to control or manage the prices in future. That is also because of the reason that OPEC as such has lost some of the lever which it has to control and moderate the prices. Because US has become a major supplier. Russia sanction removal has brought Russian barrels are there. Then Venezuela is supplying in the market. So, and post-war, there will be Iranian barrels also in the market, I assume. So I think going forward, the capacity of OPEC will be slightly lesser in being able to manage the oil markets. And that should be good for the oil importing countries like India.
Mr. Surana, we saw the OPEC increasing output by 188,000 barrels for the month of June. But, in the absence of a blockade, which is there in Strait of Hormuz, how significant is this announcement of increasing output?
No, right now the announcement remains more on paper because there is nothing much which is coming out of the Strait of Hormuz. But it does give an indication from the OPEC side that they are maintaining the policies framework which they were following since, I think, last year for rolling back their production cuts which we had taken of 2.2 million barrels per day. And they are just maintaining that. And what they have announced, 188,000 barrels, it is just what they announced last year minus the UAE quota. So more or less they have maintained the same thing. Now, as of now, it may not have much of impact. It may be only on the paper. But once the blockade gets created, it does give an opportunity for the OPEC countries to supply more in the market. As such, I think the OPEC countries will be having a lot of inventory and they will like to bring it in the market. Otherwise, it restricts their production capacities.
Okay, thank you so much, Mr. Surana, for coming in and giving us this perspective. Plenty happening in oil markets, and obviously we'll continue to weigh in on your opinion with regard to those moving parts.
Thank you.
We'll leave it at that for today, though. And what we'll do is slip into a short break, come back, continue coverage here on ET Now. You want to stay with us? Welcome back. And among all of the stocks that are buzzing, Vodafone Idea is in focus. Gets a crucial lifeline from the government. Government revises its AGR dues down to 64,000 crore, which is down nearly 30% versus the earlier number. The move removes the interest burden, retains a long repayment runway all the way beyond FY32. In fact, that is when really the repayments start to kick through. In fact, FY36, beyond FY36, in fact. Darshita gets us all of the details with regard to the change here.
Well, yes, Vodafone Idea is back in focus, and this time the reset looks meaningful. Starting off with the big development here, the government has reduced the AGR dues to about rupees 64,000 crore from the earlier 87,695 crore. That's a clear 20% reduction in the liability burden. Moving on to the payment structure, there is no further interest which will accrue on these dues, while the 10-year moratorium remains unchanged. In fact, nearly 99% of the payments are now pushed for FY36 to FY41, which meaningfully improves the near-term cash flow visibility. From a regulatory standpoint, this largely resolves a long-standing uncertainty around the AGR dues, and that in turn enhances the visibility for investors, lenders, and the company. Next up, focusing on the fundraising, Vodafone Idea is targeting around 25,000 crore bank debt with State Bank of India, leading to discussions. And importantly, this AGR relief should support the lender confidence. Alongside, the company is stepping up for the investments with a 45,000 crore capex plan over the next 3 years, focused on network expansion, capacity addition, and the 5G rollout. Operationally, this looks positive because it improves the liquidity, strengthens the competitive positioning, and supports the subscriber retention and the ARPU improvement. However, the key monitorable remains the closure of the 25,000 crore debt raise, spectrum payments of roughly 50,000 crore for the next 3 years, and the execution of the capex program. So the bottom line here remains that the clarity has improved, the balance sheet stress has eased out, but the execution will read the real test going ahead.
Thank you so much for that, Darshita. Let me, though, switch focus back to the elections, and we're starting to see those numbers trickle through. BJP certainly has a bit of a hold with regard to West Bengal as we speak. But we're joined in again by Jude as well as Prakash with regard to how the elections are playing out and what the reactions seem to be. Jude, let me come over to you first.
Well, it's getting too close to count as far as Tamil Nadu is concerned. The DMK, the TVK and the AIA-DMK locked closely in a three-horse race, really, with the TVK actually securing a lot more leads in seats that most pollsters did not give the party a chance in. Remember, it's a debut election, so anything that they gain is a massive gain for the party. And what we're told is that some of the big candidates from the party itself are doing rather well for themselves, even after that initial round of postal ballot voting has concluded. In fact, we're hearing that big names much like Adav Arjuna are in fact leading, even if only by a slender margin, in a seat like Villivakam, where he was going up against a major DMK heavyweight. Even as Chief Minister of Tamil Nadu, M.K. Stalin, we're told, is trailing again by a slender margin of about 4,000 votes in his home constituency of Kolattur, and he's trailing, remember, to a TVK candidate in that constituency itself. So the DMK pretty much on the back foot, at least as things stand, even as the Tamil Nadu numbers are favouring the TMK, even if only for the moment. We don't quite know where this will go. It's perhaps too early to say if there is some semblance of a hung assembly being in the offing, so we can't make those calls just as yet. But the big story here is that the TVK, like some polls suggested, in fact just one if I recall correctly, doing much better than initially anticipated. And also, I'm coming to you from the DMK headquarters right here in Chennai. What we are seeing here is a rather somber mood on the ground. In fact, just a few minutes ago, a number of the cadre who had gotten to possibly celebrate a DMK victory have gone mute. They're rather silent. A lot of the party workers here have also begun packing up tents and shamianas that they had set up in anticipation of a celebration. So not exactly a great day to be a DMK party member, even as the Tamil Nadu numbers are coming in thick and fast and showing a clear lead, even if only for the moment, for the Tamilaga Vetri Keragam, which also translates to a bit of a stellar debut for actor turned politician Joseph Vijay.
Yep, some big moves coming through, at least from South India. Let me go across to Prakash with regard to the update from the BJP HQ. I believe that's where you are at, Prakash.
Well, I'm at BJP headquarters, especially in their media room, which has been created here. You can clearly see BJP spokespersons are here. They are connecting with, interacting with media, and they are upbeat about their performance, especially in West Bengal, where BJP seems to be securing, majority. But these are still early trends. And I'm of the opinion that we should wait at least for 1 hour or so to get clear picture, because almost 30 seats are yet counting. In 30 seats are yet to begin, and therefore at least 1 hour the picture will be clear in 1 hour or so. However, BJP supporters, BJP spokesperson are very upbeat about their performance, going by trends. Along with that, we are learning that BJP senior leadership will start coming here around 12 p.m. Along with that, supporters will start coming after that. Sources are also indicating that the Prime Minister is expected to arrive here around 6 p.m. However, confirmation is still awaited from the party. But at this point in time, supporters are very upbeat. BJP spokespersons are very happy by seeing the early trend in 5 state assemblies elections, especially for West Bengal, where we've seen intense fight between TMC and BJP, and they are locked in. In fact, the gap of seats are not quite high, almost 20-25 seats, and almost 30 seats, counting in 30 seats are yet to begin. That means the final result could swing either side. Therefore, they are very cautious, and they are waiting for another 1 hour to get clear picture, and then the celebration will begin. Supporters have yet to come. We are waiting here. I mean, we are standing here, and will keep you updated about the latest development. Back to you.
Okay, thank you so much for that, Prakash. Let me also bring in Aditi Fadnis, senior editor at Business Standard, joining us this morning to give us her view. Aditi, plenty of moving parts, right? And it comes on a very, very important inflection point of sorts. Give us a sense of what this means for especially Tamil Nadu. Let's start with that, because there's slightly better clarity there. Of course, West Bengal is the big one, but let's start with Tamil Nadu.
Well, I'm not sure if I can see clarity in Tamil Nadu either. The question is clearly that one party will not be able to form a government. Having said that, Tamil Nadu has always been politics of alliances. The question is this fantastic performance by the TVK. Which alliance is he going to join? And given his kind of campaign during the run-up to the election, what indications does that give us? The other thing is, in West Bengal, we really have no clarity about the final outcome, because as you yourself said, counting has not even begun in at least 20-25 seats. So it's a really confusing picture at the moment, and it's very hazardous to make any predictions about what the outcome will be.
If you look at West Bengal, clearly the undercurrent is there with the BJP, right? Means in this way the leads are coming in at this point in time. Of course, it could change in the next 1 hour or so, but the undercurrent of BJP is much more stronger compared to the previous years.
Oh, without doubt. BJP has performed spectacularly in West Bengal. How much of that is due to the special intensive revision, we will never know. But certainly there is a groundswell of feeling against MLAs, sitting MLAs from the TMC, we have to see. See, this is all very speculative because we don't know how many sitting MLAs that the BJP fielded have won or lost. So incumbency can't be only against the ruling party. I think what we were taking away from the campaign and everything was that the incumbency is what is being defeated in West Bengal. So it's hard to say whether that incumbency affected BJP at all. Whether, of course, it has affected TMC given its performance, given the trends, but we don't really know what led to this current situation of trends.
One of the strong support for Mamta has been the women voters. It seems that BJP is able to fracture that segment and get that vote in its favor. Do you agree with this assessment?
Yeah, it seems like that because I mean, let us not fool ourselves. 90 upwards of 90% turnout. Especially high turnout in minority areas where the minorities are dominant, and still the BJP has posted this kind of a trend. So it's a pretty astounding performance, and I mean, credit has to be given where it's due.
In Kerala, it seems the UDF is coming back to power. At least the leads are suggesting that. And after two consecutive, power for LDF, it seems that UDF is finally back.
Seems like that, and I think the trends there are actually the clearest, apart from Assam. And I think one of the reasons for that is that despite being a strong cadre-based party, LDF, or maybe because of it, the LDF is feeling its losses the most because its cadres seem to have deserted it. So now we have to see what happens. BJP has not posted the kind of result or the kind of growth that it was expecting to, but still trends suggesting leads in 5 constituencies is not bad at all.
Finally, if BJP is able to cross the halfway mark in Bengal, what do you attribute that win to?
I would attribute that win to a total disruption of credibility of the Trinamool Congress. I'm pretty sure that people in Bengal still have high regard for Mamata Banerjee and her simplicity and her lifestyle, but the same cannot be said about her cabinet ministers and supporters and hangers-on who basically use the TMC for all kinds of extremely sinister and very questionable uses. So I think it's a salutary lesson to the Trinamool Congress. I don't know how much they learn from it, but it also means that there is a degree of polarization in Bengal that we did not expect. And now the question is, all those people who were disenfranchised because of the special intensive revision, what are you going to do about them? What are you going to do with them? Because they are effectively people who are not able to vote. If you're not able to vote, by definition, that means you're not a citizen of India. If you're not a citizen of India, you cannot live here without a visa. If you cannot live here without a visa, you need to know where to go because your country is not, or whichever country you've come from, is not ready to accept you. So it's a very peculiar situation. And it will now fall upon the state government to figure out what is to be done with these people.
Okay, thank you so much, Aditi, for coming in and giving us that perspective. Of course, Some calling this the semi-final of sorts before the 2029 elections. Bengal will be the big one, but so will outcomes in Tamil Nadu and Kerala. It'll give us a perspective of what's in store going forward. But thank you, Aditi, for coming in and giving us that perspective. Completely timed out on this edition of First Trades from Sajid, myself, and everyone who puts this show together. Thanks so much for watching. Stay with us here on ET Now. More action to follow.
Right here on ET Now. I'm Shriti Sharma, and with me is Snehisha, and over the course of the next 30 minutes we're going to be telling you all that's happening within the broader end of the market. Let's get started and let's have a look at the key headlines of this particular hour. First up, the stock in focus is Idea Forge, as the stock is witnessing a sharp jump, almost a 15% jump coming in on Idea Forge after a strong set of earnings reported by the company. The revenue rose to 141 crores versus 20 crores, reflecting strong growth YOY. The company also turned profitable at the operating level with EBITDA of 61.6 crores versus a loss of 21.9 crores in the previous year, marking a significant turnaround in performance.
Vedanta Technologies is the top Nifty 500 loser today on the back of weak Q4 earnings. Consolidated net profit came in at 32 crores versus 101 crores, which is down almost 70% on a year-on-year basis. The bottom line fell 42% sequentially as well. The company's revenue from operations in Q4 fell 45% versus the previous quarter, corresponding quarter in the previous financial year.
NetWeb is in focus as the company reported weak earnings. The stock is seen to be tanking in trade after a quarter-on-quarter decline in revenue, EBIT as well as PAT, indicating a slight slowdown in overall business momentum during the quarter. Revenue and profit both fell 4% sequentially, while EBIT saw a sequential cut of close to 1.5%.
And on the flip side, it's Epigraph that is soaring in trade after posting a good set of Q4 earnings. Revenue grew 17% to 736 crores and EBITDA too rose very sharply to 169 crores, driving margin expansion to 22.9%. However, there was some pressure on the bottom line.
And retail is doing well in trade after it reported a strong Q4 with revenue rising 28% YOY to 1,669 crores and EBITDA increasing to 233 crores with margins slightly improving to 13.9%. Profit grew almost 25% YOY, reflecting healthy earnings growth supported by a stable operating performance.
Several stocks are in focus on the back of order wins, with NCC Limited at 1,700 crores, followed by Seagull India at 918 crores. Enviro Infra Engineers secured orders worth 113.5 crores, and Atlanta Electricals bagged orders worth 190 crore rupees.
Alright, and on to the Mid-Cap Masala show. Let's get started with the first management onto the show, and let's put the spotlight on Greenply. The company did come out with a robust earnings, and just after the earnings, we have seen a sharp surge coming in on the stock price as well. But what's the outlook going ahead? Let's understand all of that in detail. And for this, we are being joined by Sanidhya Mittal, who is the Joint Managing Director of Greenply Industries, joining us on the show. Hi, very good morning, Mr. Mittal, and thank you so much for your time. And first up, let's talk about your earnings then, because you have reported a very strong numbers in Q4. I can see your revenue growing 20% YOY, EBITDA margins also expanded to 12%. But help us understand that going ahead, how sustainable are these growth numbers and what factors will be at play?
So, good morning and thank you for inviting me to the show. I think the company's performed well in the last quarter. going forward, we've given a guidance for a double-digit volume growth for the entire year on the plywood business. As far as the MDF business is concerned, we've given a higher double-digit growth, something between 20 and 30%. And we feel the outlook will remain the same because we've been able to pass on all the costs related to the war and the chemical costs going up, mainly in our sector. So we've been able to successfully pass that off within, April itself.
Okay.
So going forward, growth and margin looks to be in line with our guidance.
Okay. Mr. Mittal, hi, morning. This is Snehi also joining in. Just wanted some clarity on the MDF growth guidance. While your plywood volume growth was 16% in Q4 and double-digit growth is something that you have guided for over there. Just trying to understand what the outlook is for MDF, because if I'm not wrong, that grew about 45% in terms of volumes in Q4 and you're guiding for this number to be in 30s. Any reason for this moderation in your guidance?
So we are the constraint capacity for us. So we have one line of MDF and I think this is the maximum growth possible given the given capacity. Sometime in the middle of next financial year, we'll have another facility, then we can probably grow at a much faster pace in MDF. But today, even though there is a market and Greenply is a strong player in terms of a home-known brand, but because of capacity, I think that's the maximum we can sell.
All right, but Mr. Mittal, help us understand about the outlook on timber prices. If you can just help us with how the timber prices were back in Q4 and going ahead in FY27, how do you see the fluctuation happening?
So I think we are looking at timber prices being stable and slightly inching downwards because our dependency is majorly on domestic timber. And domestic timber is coming from farmlands of India. So in that case, we are very comfortable. We do not see any cost changing there or any cost pressure coming up. And on the demand supply side, I think we are on the good side right now. We've already seen shortage of timber for the last couple of years. And Greenply has been doing great plantation. So because of that initiative also, every catchment near our factory, I think we have enough raw material, enough sustainability, whether it's Nagaland or Gujarat or any of the states in which we are operational. In fact, we had 100 million vision and we've already crossed 90 million saplings.
Okay, that sounds really positive. Mr. Mittal, I'm trying to understand now that you're saying that the raw material pricing is in your favor. Are you going to be taking any price cuts in the near future since everything on ground is stable? And if so, any impact on your margins?
No, not at all. There's no price cut plans. I think prices should also be stable, given that the war is like this. But no prices, no plans to cut prices for sure.
All right, but Mr. Mittal, one of the tough questions, but I have to ask this, that there were some reports of IT department raid at some of your units. Give us some understanding, where are we on that front and how is this process being taken up?
So I think we had informed the exchange and even on the earnings call I had mentioned it to the investors that in our premises, there was nothing, whether it was documents or cash, which was seized. And I feel it was a wrong intel because of which they had come to Greenply. So there's no financial liability on Greenply in the initial search as of now.
Okay, understood. And let's move away from that, Mr. Mittal. Now that you're saying that everything is good on ground in terms of demand and the kind of raw material availability, you have talked to us about your capex plans for FY27. What's the amount earmarked for that, if you can throw some light on that?
So I think we have a large capex plan. I think almost 500 crores plus of capex, in which mainly in two units. I think one is Odisha plywood and Vadodara MDF. So these are the two units currently under construction and close to around 500 crores. This includes maintenance capex as well as capex for Odisha and Vadodara and the new units.
All right, and along with that, Mr. Mittal, I believe that for hardware, JV with Summit is expected to break even somewhere in the middle of FY28. I believe that this is still some time from now, but give us some understanding that once this integration is through, how your financials are expected to get a boost?
So I think, Summit is it's a precision engineering category where to sell hardware in India. So this hardware is of global standards. So we meet all the global standards as well as we meet the Indian BIS. And there are hardly few companies producing hardware in India. Greenply Summit, our JV, is proudly a company producing in India since day one. So out of the 8 broad product groups, there are 3 product groups that we produce in India today. The balance product groups are imported. So over the next year and a half, all 5 products group that are imported today will also start getting produced here. That gross margins are going to expand and the business will start seeing, closer to no profit, no loss somewhere in the middle of next year, break even somewhere in the middle of next financial year.
Okay, that sounds good. On that note, Mr. Mittal, we'll let you go. Congratulations on a robust set of numbers for Q4 and good luck for the financial year to come.
Thank you so much. Thank you for having me.
Thanks so much for your time today. Okay, viewers, on that note, time to slip into a very short break. But before we do that, just taking a look at the market. At the benchmark level, the Nifty has been able to hold on to the opening gains that it saw about an hour ago. So we're still 215 points higher and now looking good above the 24,200 mark, about a 1% uptick over there. What's looking absolutely in line with the benchmark right now is the broad end of the market, because you have the Nifty mid cap and small cap that are both up about 1%, so looking good over there as well. From the Nifty 500 group of stocks, you have 390 stocks that are in the green right now with 110 in the red. Some of the big gainers today include names like Dr. Lal PathLabs, 10.5% higher. Meesho on the back of earnings expectations. You had an upgrade last week from JP Morgan, so that looks good. 8.25% higher over there. Aster DM, RR Kabel on earnings, Vedanta, HFCL, Newland Labs, all of them looking good. On the flip side, it's names like Zentech on the back of weak earnings that's under pressure, along with the Sun TV, NetWeb again on earnings, Garden Reach, Mascot, some of the shipping names are under pressure today, along with the Sona BLW, Kajaria Ceramics and a Fiat. On that note, time to slip into a very short break. On the other side of the break, we'll be joined by the management of ESAF Small Finance Bank on their earnings, so stay tuned and we'll be right back. Back of their earnings, we have the management. We have Mr. K. Paul Thomas, the MD and CEO of ESAF Small Finance Bank, joining us on the show. Mr. Thomas, morning and thanks so much for your time. Let's start by decoding your earnings. Good to be chatting with you today. First of all, your advances, they are growing almost at a double pace compared to the deposits. What are the key drivers here? How sustainable is this growth? And on the back of this, how will you manage funding mix going forward?
Okay, so last financial year we have crossed our gross advances stood at 22,426. So there is a growth of 19%. And on this 19 growth, the important fact is that we have grown our secured book from 53% to 61%. Our strategy on MSME, agri, retail, and gold, MARG, we call it as MARG strategy. That for last 4 years we have been driving this, and this MARG book constitute 56% over, and we were able to brought down the microfinance concentration. And yes, on the deposit side, there is a 25,850 crore, 11% growth we could report. And out of this deposits, 92% are pure retail deposit, and on the bulk deposit also around 88% of the bulk deposit is non-callable. So total, if put together, it is close to 99%. 99% is actually retail deposits. So on the funding mix, so we were able to manage through refinance and IBPC. All these provisions we used. That's how it was being funded. And going forward, we foresee that the deposit growth itself will be able to fund the growth.
All right. Good morning, Mr. Thomas. This is Shrishti also joining in. But let's talk about your NIMs, because NIMs expanded to 7.3%. How sustainable is this improvement going ahead? Help us understand a bit more on this.
Yeah. On the NIM, see the micro, because NIM, we were having double-digit NIM earlier. It has come down to 8%, then 7.3%. So as the asset mix changes, the NIM will come down. But most of our assets are we were able to high yielding assets like even in mortgage, mobility, gold loan, all these assets also yield higher yield than the other products. So with this asset mix, we'll be able to maintain this. So about that 5% we'll be able to maintain it.
So that sounds good. Also, if you could help us understand when it comes to the MFI book, that growth over there has been around 15% on a sequential basis. Can we conclude that this is the beginning of a sustained recovery, or if this is a temporary uptick, if you could help us understand how the MFI book is shaping up?
Yeah, the MFI book is shaping. Actually, it is a sustained its recovery is sustained. The collection efficiency has improved. The current book collection efficiency is 98.5. The slippage ratio significantly improved. SMA book is also significantly come down. So all these aspects, if you take the MFI sector has improved overall. It is not only for ESOP, overall all over India. The segment has improved, and we already have this segment. Actually, the customer base is with us, and they have been taking loans from us for many years. So this growth is actually, it is a very organic and natural growth we have seen.
All right, and along with that, Mr. Thomas, do you expect credit cost in MFI to decline further from the current levels? Give us some understanding on that. And are there any pockets of stress still visible in specific geographies or borrower segment?
Yeah, the credit cost has significantly got reduced. FY 2025 it was 6.72. It has come to 4.1% in FY 2026. So we expect as further reduction on the credit cost, and we are not seeing, unless any significant climate change issues or any issues doesn't arise, we are not seeing any significant change in the increase in the credit cost coming days.
On that note, Mr. Thomas, we'll let you go. Thank you so much for your time. Congratulations on the quarter and good luck for the new financial year.
Thank you. Thank you so much. Thank you so much.
Thanks so much. Okay, viewers, while we're talking about stocks that are in focus today, let's throw the spotlight on Idea Forge. That stock is on fire today, with the stock seeing almost 20% gain in trade after a very strong show in the fourth quarter. The drone maker saw positive EBITDA after 6 quarters consecutive. Now, my colleague Karan, who tracks the sector very closely, is joining in with all the highlights of the company's quarter 4 earnings and what's fueling the stock in today's trade. Karan.
Well, there's a company that holds a commanding position in the unmanned aircraft systems market. And this company has reported a positive EBITDA after 6 quarters. Yes, we are talking about Idea Forge Tech. The company is out with a very strong set of Q4 numbers, wherein the defense segment has accounted for 86% of the company's Q4 revenue. and that's a significant tilt as compared to the Q3 numbers. As far as the company's order book is concerned, the company's order book now stands north of around 300 crores, and the company achieved its highest ever annual order bookings of 500 crores in FY26. Moreover, the company completed the targeted execution of 40% of open orders in Q4 with improved margins and a positive EBITDA in FY26. From a diversification standpoint, the company is entering the combat drone segment, which includes the long-range strike platforms and kamikaze drones, for the upcoming procurement opportunities for the Indian Armed Forces. Moreover, the company also received its first purchase order in the United States from Lamar Consolidated Independent School District Police Department for deployment of its drones to ensure student safety across a school district in Texas. Moreover, this company is also the first Indian drone company to train NATO forces at the US National Test Pilot School, and this showcases the company's deep tech defense capabilities on the global stage. On that note, do watch out for Idea Forge Tech.
All right, thank you so much, Karan, for getting us all those details. But that's not it. Karan, tell us more about Zen Technologies, because that stock is the top Nifty 500 loser today on the back of weak Q4 earnings. Karan, help us with more understanding and details about Zen Tech.
Well, Zen Technologies is under immense pressure on the back of its Q4 earnings. The company has reported a weak set of numbers. While the revenue is down 45% year-on-year to 180 crores, the EBITDA has declined by more than 63% on a year-on-year basis. The company's order book stands north of around 1,300 crores, out of which 93% of the order book is inclined towards the domestic markets. The company also reported new order inflows of 431 crores, which was secured during Q4 of FY26 itself. On that note, the management has stated that the FY26 financial performance was muted as compared to the FY27 performance, and this trend was communicated earlier to the investors and the stakeholders. The company has gone through a structural transformation that took place over the last 2 years, and on that note, the company Zen Technologies has ended FY26 as a defense company with 5 capabilities, and these are ready to be offered to the armed forces, which include the training simulation and systems, counter-drone solutions, automated weapon stations, combat robotics, and drones. FY26 was a year where the order conversion timing was delayed beyond what the company expected, and now the FY27 execution is clearly visible and evident to the company. Recently, the company received an arms manufacturing license from the Government of India for cannons, and this authorizes the company to manufacture cannons, critical weapon systems with strong applicability in air defense, naval operations, and the counter-unmanned aircraft systems roles. On that note, the company has guided on the revenue. The company is set to record its highest turnover in the company's history in FY27, and the company has an execution target of 4,000 crores over the next 2 years. Moreover, the company is also targeting an export contribution of roughly around 30% of the revenue by FY28. On that note, do watch out for Zen Technologies.
Okay, Karan, thanks for taking us through that. So one very robust set of earnings from Idea Forge, and on the flip side, the top Nifty 500 loser today, Zen Tech. Karan has broken down both those earnings for us. On that note, I'm afraid we're completely timed out on this edition of Midcap Masala. From Shrishti, me and the team that put this show together, thanks so much for tuning in. But stay on to ET Now, because Buy Now, Sell Now is up next.
केसरिया से